How's it going, guys? Just going to do an S&P 500 or SPX analysis and its relationship with Bitcoin and what levels we could expect on the S&P 500, and maybe when we see that level, we get a Bitcoin rollover as well, so market top. And all right, we're going to go straight into it. So we got the green line marking the first break of the all-time high of the S&P 500 after the GFC and the dot-com bubble. And you can see that it produces a peak there for Bitcoin as well. We need to understand that Bitcoin was very early stages here, and the actual peak for Bitcoin did come before the S&P 500 break. So 500 top, and it actually continued to rally into 2015, whereas Bitcoin started to depreciate as it is a new volatile asset. So the next break we see in July 2016, and this appears to be right after, if I'm not mistaken, the one of the halvings for Bitcoin, and shortly after a spike in the S&P 500, crypto or Bitcoin itself started its rally into the the $20,000 region, and it topped out at a similar time before the S&P 500 appeared to do a consolidation like this into COVID. Right. Moving on into the next cycle in 2020, we have an all-time high break of the COVID high around here, a few months after the halving, and shortly after that, a spike in the S&P 500 pushed Bitcoin all the way up to its new all-time highs of $69,000 on November of 2021, same period that you see the S&P 500 rolling over. You actually see Bitcoin roll over before the S&P 500. This is something worth noting because this happens twice, right? It's happened twice in the past. So perhaps when we see, like what I'm trying to line up here is that if we see these levels within the S&P 500, we should start to be very cautious around the price of Bitcoin, because if history repeats itself, we might see the cryptocurrency market roll over before the stock market. We've seen it already once here, and we see it two other times here, not in the same fashion as the first time. All right, I'm going to delete all the drawings off quickly, and we're going to do a quick squeeze over S&P 500. Right, so we can utilize the same methodology as done in previous analysis in my videos. And first off, we're going to start off with these fib retracement tools, but extending upwards to see the level that it can get to for the market top before a wider consolidation. And these periods of time, they're in between. I believe they're called 16-year cycles. So there's a consolidation period of like 10 years, or not 10 years. I think it's like, I don't know how many days, how many years, yeah, around 10 years, and 16 years of upside, right? That's where I am drawing these fibs from. And these will be important because the same methodology that I use in order to snipe peaks within Bitcoin is utilized here, and it will give us an idea of what levels, immediate levels, we should be mindful of. Right, so for the first one, you see the Great Depression. It actually projects a 1618 level right here, right? And once that is tagged, we get a market top in 69, right? March 69. It's a little bit different in terms of the next cycle. It projects out a 4618, which marks out the top of the dot-com bubble. And why these numbers become relevant isn't like, we're not looking, okay, what if the GFC went up to the 2618 level? It stops being relevant after the top is in, right? and it's more about market timings and relevant levels found in the fibs. So now we know that this is a 4618 that marks the top, 1618 that marks the top, and the important number to note here is the 618 level and multiples of it, right? So it's just an extension of this move multiplied by the number you see above. This is on the logarithmic scale. Apologies. So we also see now that we are closing in on a 618 level, 2618 level, as seen here, right? So we're not steadily, we're rapidly approaching the 2618 level of 6,300 and we'll call it 6,300. So as we tag 2000, the 3,600 level, we got to be super cautious with Bitcoin. I think like that might be a de-risking event for myself. And this looks like it's putting in a third angle, and you may have heard this from other traders before. So you're seeing this angle, you're seeing this angle, and the third angle of a rally is often the steepest, right? That's a very primitive way of explaining what a third angle is, but it looks like that could be the case within the next few months. Maybe there could be some consolidation and a push even above slightly and hovering around that area. That's when I'd be super cautious on the markets. But what we're seeing here, obviously, is this level, right? Second part for like sanity check is the trend-based fib tool, right? So we have the levels marked out here of the fibs. I know there's a very terrible way of drawing it, but please just bear with me. I'm going to use trend-based fib extension, and how you calculate trend moves with fib trend-based fib extension is find the impulse wave that starts the rally, right? The impulse wave that starts this rally is what I see is here. It's an impulse wave that moves up into this rally. And I can show this on Bitcoin in another video, but I'll just do it for this video. This one for this video. Sweet. That is incorrect, if I'm not mistaken. Right. So it's a small move here, and it's the first high that's created and the low, right? So it's like a ball that you bounce. You throw the ball up, wherever it bounces to, it's going to project out to the fib level that's marked out at the top. And what we're looking for in particular is confluence with the level that we drew with the fib tracement tool, right? So let's try to mark this as accurately as possible. You can see the 3618 level is marked here quite nicely, and also the 4618 level marks the absolute high that is seen in 73, right? So my general rule is looking between, especially for Bitcoin. This isn't always going to be the case for more mature markets, but things like Bitcoin, things like altcoins, they tend to go to the 4618 level, or if you're more conservative, which I usually am, I like to mark at the 3618 level on cryptocurrencies in order to start considering taking profit as it starts to push into the 4236. Right, and you'll see that in a later video. But now that we have a point of confluence, we have that 1618 level marked, and also the 4618 level marked as well, which actually marks the top of the stock market in that level, but also the 1618 level marks out the top seen in 69, right? So those are key. This is a very key area to be looking out for in this period. Obviously, this is very, very hindsight, but we're moving on. Cool. So now that we understand the cycle theory in terms of this consolidation period and a potential, 16-year cycle, or how many ever years it is that moves forward, got to mark out the same principle. You see the impulse wave that starts the move and the bounce that comes below. Cool, cool, cool. Right. Now we have higher values with those levels, right? I'm going to draw out the tool here again. You see the 2618 level, you might need to disregard this because it's too early within the larger financial cycle to be looking at the 2618 level. Something worth noting is the 4618 level. There's no confluence with the 3618 level, and it starts to continue. Now you look at the full extent, and the full extent usually for me with Fibonacci's, especially the Fib retracement tool, is the 4618 level, depending on what instrument you're measuring. And this actually marks the top as measured before, and it has confluence between the 6618 and the 5618. I would even say that the 6618 level is like the most relevant level here to be looking at alongside with the 4618 level. I would just like overlap it like this. So should you see this level, say we're like here right now, right? We're like here traveling upwards and we see that 4618 level, we would be watching that level like a hawk because we're like 15 years into the cycle or whatever. Should it come up to that level, we would be looking to sell. Right. Now that we have that covered, what are we seeing here? I know everybody's so curious right now. Cool. I could be wrong with even drawing it like that. Cool. We have the impulse wave up, and we have something very interesting here, right? We do have an instance where this 3618 is rejected by the COVID. We have the 4618, which is the key level that is taken out by the previous Bitcoin all-time high. And we have an overlap with the 2618 level, the 2618 level, and 5618 level, which is quite exact, right? This is something definitely worth taking note of, that there is confluence between, well, it's quite exact actually. The line is here, right? Actually, no, if it's tighter, it's a bit lower. But I'd go the conservative route and take that 2618 level of 6,300, right? Obviously, you might see the price push up above it a little bit, but in terms of where we are in this cycle currently, I would say it would be unlikely, because we've seen in the past, that these extensions from previous consolidation slash bear markets are the key levels to be looking at. Would we say that it's possible for the stock market in the next 2 or 3 years to realistically go up like this to the 3618 level? It's sort of unlikely in the largest cycle timeline. 2618 is looking like a very um, good place for the stock market to top out. With that being said, once the S&P 500 gets to that level, I would be very cautious with the cryptocurrencies because it's a risk on asset. And despite people saying, it's a flight to safety, people will be selling cryptocurrencies should a market collapse occur, in my humble opinion. Hopefully that was useful to you guys. I've tried to provide as much value as possible, and if you like to see some other form of analysis on certain tickers, maybe they're altcoins or whatever, I might look into some things that I've been looking at recently, like AVAX, SUI, um, Say, and um, other altcoins that I've been trading as well. So yeah, hopefully that's helped. Peace out, like, comment, and subscribe.